The US presidential election is on Tuesday at 1 o'clock. Man, this gives me a headache. Is this the time where I take my phone and click on the buy button on Nasdaq because it's just about to start shooting up to the top? Or is it a time where we step back and look at the monthly time frame on Nasdaq and start considering the fact that these could be the highs on Nasdaq because it might want to just come back for a little retest before it continues with its upward movement. Now, this will be really bad for us, day traders, since we like to go with the trend. When it's forming a healthy trend, we should see a little bit of, buys, sells, buy, sell. So could this be indicating a change of trend for the day traders in the meantime, or we'll just see Nasdaq keep pushing up to the top? Now, whatever the result is, what we know is we've been having a really lovely winning streak for the last couple of months. The overall graph for our progress is just been going up to the top, and we are not going to just stop now just because we have an election. We're going to still obliterate this market. So before we dive right into the charts, if you're new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn on your post notifications, and subscribe to the channel. This week's analysis is actually pretty simple and straightforward because we already know that it is not technical analysis that will be dominating these charts. As you can see, from Tuesday, Wednesday, Thursday, well, the market is going to be really volatile. Whatever the result is from the Tuesday presidential election right over here, we're going to see a lot of volatility in the markets. You can already see that. On Thursday, we're going to have the initial job claims released. We're going to have FOMC. At Wednesday, we also have as much news. So the week is indeed a really hectic one. And a lot of people are actually scared to trade these types of markets where we have news back to back. That's what I actually love, because when there's fear in the market, that is when we want to look for opportunities. And then when everyone wants to be greedy, we want to stay back and relax, right? So I know a lot of people don't have enough confidence to trade when the market is going to be looking like this, and especially of every single news event that's going to be going around. Yeah, it's going to be a really hectic week, right? So right over to our charts, let's just talk on the technicals, because after all, that's all we trade, right? We're going to be trading technical analysis as usual. And then the good thing about this is we always wait for the market to come to our point of interest. We don't just have a bias without even knowing what the market wants to do. So whatever the market ends up doing, we're going to flow with that, because all we know how to do is to wait for it to come to our point of interest first. And then now we want to make a decision when the market is sitting right at that point of interest. Now, if you trade like that, you understand that it will be easier for you than to sit and think about, so if this person wins the election, will Nasdaq buy up to the top? Or if they lose, you just have to wait for the market. Whatever result comes out, wait for it. Look at the market. If it comes to a certain level, and that's a point of interest for you, then look at price action. Look at what the retail traders would want to do. You don't want to do that. And also look at what the institutional players want to do. That's exactly what you also want to do, right? Remember, we always want to trade with the institutions, because those are the people that will eventually move the market. So it's not really going to be a difficult week. In as much as we do have a lot of news events, I don't think it's going to be a really hectic week. We're going to just be calm and then trade exactly the way we always trade. But in this case, we're going to be using extremely, proper risk management just in case. This is the market at the end of the day. We always want to be careful, right? And then especially now that we have a lot going on. We're going to start off with the very easy chart, which is gold. This one is going to be really volatile. As you can see, it has been pushing up to the top, right? And then this is the monthly time frame. That is more for like swing traders, those people that want to hold for like the longest time. But for us, we're going to go to the daily time frame, and then I already have my 2 points of interest marked up right over here. And for gold to continue with its upward movement, right, we're going to want to see it coming to this level and rejecting at this point of interest, or coming to this resistance that it broke out of and turned into a support, right? So it would probably come and reject at this level, push up to the top, continue, and then break the highs, or it will break out of this level and then come, find a resting place in this zone before it decides to push up. This level is also really supported by a trend line. If I want to pull it out, I think I can have a really nice little trend line right over here. You can already see that. Then that adds confluence to our analysis, right? That is actually really simple and straightforward. This trend line right over here has to be respected if we want to see gold continuing to push to the upside. If it ends up breaking out and disrespecting this trend line, we have to wait, step back, reanalyze. The setup would have been broken and it won't make any sense. What we don't want to see in the market is the sellers dropping this market with so much momentum to this level. We'll now have to wait to see if the buyers would want to step into that market, or the sellers will still remain in control. But if you see, selling momentum pushing the market to this level, and then all of a sudden they start losing, power, and then they sit at this level, there is a high chance that, the buyers are going to come and take over, and then, end up pushing the market right to the top. Very simple. We always do this. This is exactly the same way we analyze. That's exactly the same things we're going to be looking for on gold. Now moving on right to US30. On US30, ooh yeah, what are we having right over here? From a technical point of view, like I'm saying, we can already see that we have this level, which is a point of interest. We do have another level that was right above it. I did say in a previous video that this level is a weak zone, right? You can already see that we had a lot of money resting at this level. It did try to break out of it, and then yeah, it closed outside, but you can clearly see that the next candle, which is the daily candlestick, because we are on the daily time frame, ended up closing, inside. So because of that reason, it's not yet a really confirmed, setup. We always want to see the next candle coming out and confirming the break and close that it did at that level, right? So this level right over here, we're going to still leave a question mark at that zone, and then let's take this as our major point. We're going to take out a trend line right over here. You already know how we draw them, week to week, and that's absolutely elementary, right? That's very simple. You can clearly see that we had a trend line that was moving up to the top. It has been broken out of, and what I'm seeing right now is looks like a little retest. You can clearly see that the market broke out of that level and has closed outside of it. Look at how it went back to retest and it's starting to weak right back down. Let's see what the 4-hour time frame is saying. Exactly, you can already see that. Look at how accurate. If you draw your trend lines the way I do them, you always get these, this type of accurate entries and, sniping. Look at how it's sitting right at the trend line. Remember, it's week to week and a body to a body. So what is happening here? We had the buyers pushing the market to the top. They got to the level where the trend line was broken out of, and then the sellers stepped right into that market, and then they dropped the market right down. So what is that saying? The sellers are kind of still in control of this market, right? In as much as the buyers wanted to take over, they have failed. So right now what we can do is to pull another trend line at this level. Remember, we're always going to draw them accurately, right? So let me just adjust this so it's a lot more accurate, week to week, body to body. So right now it is really obvious that we had this trend line and the market failed to actually break out of it. You can clearly see that it went to break out, it did not close outside of it. And for that reason, we don't consider that as a broken trend line. What we're going to do is we're going to clone this level. Why? Because I'm always saying that support and resistance levels are not lines, they're zones. So this zone right over here is your point of interest. Then this becomes invalid because the market is already above that level. So we're going to still consider this. We're going to say that as long as the market is still within this level right over here, the sellers are still in control of the market. Then what does that tell us? So at this level they're still in control, and then at this level they're still in control. So we can actually delete this and then use our horizontal instead. Let me use a rectangle in this case. So we're saying that before we look for buying positions on US30, we want to see the market crossing this zone right over here. If it fails to cross that zone, we're still looking for selling positions, because we do have a level on the daily time frame that the market has to get to, which is right over here. That is actually really simple, right? So before we look for buys on US30, it has to cross this level. In the meantime, we're looking for sales for the market to come to that level. And then right over to our favorite, which is the Nasdaq. We had an absolutely lovely trade right before the market closed on Friday. The NFP result was not what a lot of people expected, especially right as soon as it got released. Only gold moved, with so much momentum. US30 and Nasdaq, especially Nasdaq had little to no movement. This was like the NFP news. Let me just see. This is 3:30, right? So this is when NFP was released, and then this candlestick was an NFP candle. Normally we see candlesticks like these, when we're talking of NFP, but we only got that on gold. And then US30 did try to move up to the top, but nevertheless we did catch this, lovely trade. What we're gonna do is I'm gonna take you right back to Friday and let's talk about this trade. Yo, it is 30 minutes to NFP and we're super excited. Obviously, I'm not going to trade the spike, right? I'm just going to wait to see where it spikes. But what we're going to do right now is we're going to mark up our levels. It's absolutely important to always have your levels marked up before you dive into the market. So what I'm going to consider as my levels are this first one, the middle one, and this last one right over here. So I'm saying that the market has potential of either breaking out. If it breaks out of the first level, we're going to go in right with the buys. If it comes back as a little retest in the middle level, it is going to depend on what type of price action I'll be seeing at that level. And then my last level is, my entry point. If it does get to this last level, I won't even hesitate. I will go right into the buy, because because that is a strong institutional zone, right? All right, guys, it is like 2 hours later. That was the most ridiculous NFP result I have ever seen, especially on Nasdaq. But the good thing about it is we had the market breaking out of that level, like I had explained, that if it does break out of the first level, we're going to go right to the buys. So you can see that we have already smashed our second take profit in the inner circle, which is 100 pips. And right now we're just taking profits. Look at this level, at the zone. I gave it as a buying limit, right? At that level, at the middle level I was talking about. But then we decided to enter a few positions, as the market was showing us bullish momentum. Right now I have a second take profit. Absolutely lovely. What are they talking about in this mentorship group? Collins is like he's done for the day. Let's just check out what his we have the exact same trade in the mentorship group with Collins. Absolutely lovely. Shout out to Collins. Go ahead and give him a shout out in the comment section. I always see him commenting down below, and it looks exactly the same. Look at that. We have the exact same entry point. What a lovely trade we just had. So that's about it. So since it already broke out of these levels that we're having, obviously we're going to expect a retest of those levels. And if we don't see that happening today, we'll probably see that happening on on Monday when the market opens. So what I'm going to do is I'm going to take you out and throw you right to the weekly analysis on Sunday. Welcome back. Okay, right onto our chart on Nasdaq right over here. So we're going to start off by deleting that lovely trade that we just had. But if you were listening carefully, you heard me talking about we would expect a retest at this level, and that's exactly what the market did. This is where I closed off the recording, somewhere around this spot, and then the market ended up dropping right to retest this level. So the same thing still stands for us day traders, because this is a 30-minute time frame. We want to see the market holding at this level. We don't even want to see it coming to these zones, because if it breaks this first one, the second one, there's a high chance that it'll end up dropping right to the bottom, right? So for our Nasdaq analysis, that is really simple for day traders, right? We have not yet started to analyze the overall picture. So when you open the chart on Monday, you want to interpret what is happening at this current level, right? So we're saying that if it does break out of this little zone that it's creating, then we would want to see it coming to these levels at the top, and then we'll probably want to keep riding it up to the highs, because Nasdaq is indeed trying to threaten the highs. And what I'm seeing there is a lot of people are going in for the sells. I've noticed that, right? So let me just look at that on the daily time frame. Because of these levels, you see that a lot of people are considering those as double top, or whatever chart pattern you want to call that. And that's exactly what's happening at that level on Nasdaq. And obviously you already know that I was targeting the highs. Yes, I wanted Nasdaq to go to those highs and obliterate them. I wanted it to break right through the highs, right? So overall trend still remains bullish on Nasdaq, but what we might see is a little bit of a retest, especially now that we're going to be expecting a lot of news in the market, right? Well, this is not even a correct trend line, because that is not my lowest swing point. My lowest swing point would be this one right over here, and then I want to connect it to this one right over here. Right, you can already see that. So if Nasdaq actually fails to break these highs, there's a high chance that no, I don't want it to do that. I really don't want it to do that. But that's the weekly time frame, right? A lot will happen in the market before it ends up getting to those levels. There's a high chance when Nasdaq moves, when it decides to move, it really moves. Look at this candle. If we take this candle and put it right over here, this could literally be, oh wow. Let me just see on the daily time frame. On the daily time frame, it will probably take a whole week for that to happen, right? So we're going to pull up another trend within the trend. What we're doing here is not correct, because we are drawing a body to a week. So what I'm going to do is do this. We're going to use this one instead. We're going to use that body instead, and then use this body. I absolutely don't like people that do trend lines using a week and a body. Why would you even do that? That doesn't even make any sense, right? So what I'm saying is, we have Nasdaq looking like this, then obviously we will no longer need this a trend line at the bottom. It's just for a guideline, a bias, right? And we're saying that we want to mark up our levels on Nasdaq. This would be the most important one, but it has already been disrespected a lot, so we're going to take that one. And then this still brings us to our weekly analysis from last week, right? So we're saying Nasdaq still has a chance of dropping to these levels, and then if it does get to these levels, then we'll probably want to look for buying positions in those levels. But as for the short-term buy, so it won't be a difficult trade. It won't be a difficult trade, especially the fact that we have a lot of volatility that's going to be stepping into the market, right? We would end up just seeing big candlesticks just coming to these levels, or just going up to those levels, and then we're just going to obliterate the market just like that, right? Just like that. Oh, we already have Nasdaq breaking out of a certain zone on the 1 hour time frame. Is this correct, or I am not seeing nicely? Oh yeah, it didn't break out. Okay, that becomes invalid. Never mind. So there's a chance that the market breaks out of this trend line. That would be a confirmed buy again, right? We just want to see, price action at these levels, and then if it does break out of here, these lines, you already know that we're already just going to be, obliterate. If it breaks out of here, then our next target is right to that, zone. So in this case, you don't even want to be staying in the market for that long if you're not going to be a swing trader holding, the trades for the longest time. We just want to go in and out every day. We want to look for an opportunity on a daily basis, right? So that's what I will be looking at on Nasdaq. Doesn't seem complicated. The setup is just straightforward. I would suggest waiting, for the market to get to the specific points of interest that I spoke about. And then after that happens, we want to see how the market will react at those zones. And then we now make our decision whether we're going to go in for the buys or we're going to still relax to see if the market wants to say otherwise. But that's it from my side. If you did enjoy this video, don't forget to smash that like button, turn on your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'll see you in the next lit video. Peace.